why not dive into a deal I'm currently working on? This is a live deal. I literally just got the information earlier today. I haven't had a lot of time to really dive deep into it, but what we're looking at here is a 31 unit bachelor building, plus it's got one restaurant. They're asking $3 million. It's only 31 bachelor units, so these are smaller units. And in fact, these bachelor units, only one of them has a stove. We can see they had gross income of $255,000, expenses of $88,000, and net income of $167,000. So one thing that definitely stands out to me right off the bat when looking at these numbers is analyzing a 31 unit bachelor apartment building. How exactly do you run the numbers on something like that? What are we looking for as real estate investors? Well, that's what we're going to dive into in today's video, where I actually show you some of the documents that the seller's given me. Thankfully, they didn't make me sign an NDA, so there's no issues there. But I kind of want to peel back the layers behind this purchase. I'm pretty sure I'm going to keep this deal, but let's find out in today's video, where we're just going to kind of pick away at the different layers and dive deeper into the numbers on a potential acquisition I'm looking at buying. Hey YouTube, Matt McKeever here. So we're shooting videos with Casey Wong today, but Casey had to quickly run out to do a quick meeting with his developer. So I thought, why not dive into a deal I'm currently working on and share it with the audience? So this is a live deal. I literally just got the information earlier today. I haven't had a lot of time to really dive deep into it, but what we're looking at here is a 31 unit bachelor building, plus it's got one restaurant. And like we find with a lot of these mixed-use larger buildings, we often only get kind of incomplete information. So that's what I'm dealing with right now. So what I'm going to pull up is they've given me a basic income statement. So I'm going to walk through this basic income statement with you guys. So looking from February 1st, 2015 to January 31st, 2016, I can see that our total revenue for this building was $217,000. Total expenses, they have estimated at $80,000 for a net income of $136,000. Now, to give you a little bit of perspective, what they're currently asking for as far as pricing on this property is they're asking $3 million. So in essence, what we're looking at is just a little under $100,000 a unit on this building. Now what's interesting is it is just bachelor apartments. So in my market of London, Ontario, it would often make sense to pay $100,000 a unit. In fact, I would normally jump at the opportunity to pay $100,000 a unit or less. But that caveat being, it's only 31 bachelor units. So these are smaller units. And in fact, these bachelor units, only one of them has a stove. So that dramatically impacts the type of tenants we're going to be attracting. Right now, this building's primarily focused on grad students that are going to Western University. And that's great to know, just because, again, if we weren't going after the grad student population, or we weren't doing like an Airbnb on this building, we might not have a lot of great tenants to pull from, if that makes sense. So in general, based upon my experiences as a landlord, what I found is if your apartment doesn't have a kitchen, guys, if it doesn't have a proper stove, you're going to struggle to find high quality tenants to move into that building. And because of that, you're going to constantly find yourself in a struggle with dealing with like C or D class tenants. Comes with a lot more social integration issues, just often a lot more like drug abuse, a lot more graffiti and damage done to your building. So for me at this stage in my investing career, not very palatable, not very attractive. But again, we're kind of going after grad students. This is downtown London, Ontario. It's actually quite close to Fanshaw's downtown campus. So I also like the opportunity of potentially attracting Fanshawe students to move into this building. So we're already dealing with a really unique building, but let's dive into these numbers a little bit deeper. So in 2017, what we're looking at is $233,000 gross, $97,000 total expenses for a net of $136,000. So again, very similar to the previous year. Moving on to 2018, again, the numbers look very similar. I like to see that though, to be honest, when I'm looking at potential investments. So again, we wouldn't necessarily expect to see dramatic pops and decreases in the valuation or in the net income of these properties. What we'd normally expect to see is a relative relatively gradual increase in profitability. Then moving into 2019, so getting up to the closest finished financial year for this building, we can see they had gross income of $255,000, expenses of $88,000, and net income of $167,000. So one thing that definitely stands out to me right off the bat when looking at these numbers is our expenses actually over the last 3 years have been decreasing while our income's been increasing. Now this is possible, but in general that's something that's going to kind of be a red flag to me, because it just seems unlikely that we're going to be able to get more and more income while getting our expenses lower and lower every year. Now sometimes we'll find that a landlord's recently just stabilized the building, and that's the factor behind why they've been able to increase it. However, I already know that this owner has owned the building for 8 years. So I would expect if he had stabilized the building, it probably would have happened in the first 2 to 3 years of ownership. So again, this naturally sets off a red flag for me. Oftentimes what we'll find, the less scrupulous owners doing is they will actually kind of inflate their gross rents and kind of hide or smooth out some of their expenses to make the property more attractive in the year of sale.
Cashflow Tribe.
Hey YouTube, have you checked out Cashflow Tribe yet? It doesn't matter whether you're an experienced, seasoned investor or brand new to the game. I can probably predict if you're currently not having the level of success you want as a real estate investor, it's due to one thing. That one thing is you're not making enough offers. Plain and simple. You need to be making more offers as a real estate investor if you want to hit those big, audacious goals that you're setting for yourself. So here's the deal. Cashflow Tribe, that's the community that myself and Ben were making together. And so Ben's actually so busy trying to provide value to you guys that he had to take off there. But here's the deal. Cashflow Tribe is really a one-of-a-kind community focused on results. That's the difference between us and everyone else. We want to get you guys those results. I'm tired of seeing people commenting on my YouTube channel for 2-3 years now, but they're not making offers. What's holding you back? I'm going to guess that it's either a lack of confidence or a lack of competence, and we cover both of those things in Cashflow Tribe. So here's what I'm going to do. I'm going to make you guys a 7-day free trial offer. You can join Cashflow Tribe completely free, get it tested out. If you like it, great, stay and pay. If you don't, well, I hope you at least find one great idea that you can take away and use to start making more offers, gain more deals, and finally start making the money related to real estate investing that's probably why you're watching my YouTube channel. So let's do this, guys. Let's make 2020 your year.
Cashflow Tribe.
So again, this naturally sets off a red flag for me. Oftentimes what we'll find, the less scrupulous owners doing is they will actually kind of inflate their gross rents and kind of hide or smooth out some of their expenses to make the property more attractive in the year of sale. Not saying that this owner did it, but definitely something that we want to be cognizant of. The next thing that really jumps out to me is when I'm looking at property taxes. So property taxes they're showing is only $11,000 or $12,000 a year. Now for a 31-unit apartment building that also includes a commercial component, in this case a restaurant, that doesn't sound right. Now it may be that the restaurants paying their own property taxes, and that's quite common once we get into commercial real estate and commercial rental spaces, but that's going to be something I'm definitely going to want to go back and double check on. Otherwise, repairs and maintenance. I can see in 2017 repairs and maintenance were $31,000, but in 2018 they were $23,000, and in 2019 it was $17,000. Again, it seems strange that we've been able to cut our repairs and maintenance by almost 50% over the last 2 to 3 years. Now, again, it may be that something just unusual happened back in 2017, but I'm going to want to dig deeper and get more confirmation from the seller just exactly what's going on here to make sure I really understand, why we're seeing such a decrease in repairs and maintenance. Now, the only other thing that comes to mind is I don't see lawn or snow maintenance, so that may be bundled into the general repairs and maintenance, but again, we'll often find landlords that are in the process of selling their building, they'll forget to include some of these expenses like snow removal, like lawn maintenance. Now, this building doesn't have a lawn, but it definitely would require snow removal because there's 10 or 12 parking spaces included with the building. Otherwise, going through the expenses, no immediate red flags jump out to me. In fact, the insurance, if anything, seems a little high. $12,000 for a 31-unit apartment building with a restaurant. Again, that restaurant may be the reason the insurance is high, but I think I might actually be able to save a little bit of money on that expense item category. The only other thing that really jumps out to me is there's no property management fee. Now, I already know that this owner, he already self-managed, so that's why he probably hasn't included. But for someone like myself that's looking to really grow a scalable real estate investment business, it's going to be critical that I include a accurate property management fee. Now, in general, once we're getting into larger buildings, 20, 30 units, we'll usually find that our property management fee is going to be somewhere between 3 and 5% of gross rents. Now, because this is grad students and they're 31 bachelor apartments, I'm thinking it's going to be a little bit more of a pain in the ass to manage this building than your average building. So I'm going to want to probably come in at 6, 7, maybe even 8% of gross rents as my estimate for property management, rather than coming in that 3 to 5 range. The one other thing that this owner told me that we find is very common when dealing with large multifamily buildings is he has not included the laundry income. And so he's telling me that laundry income's at least a few $100s a month. Now that seems very plausible for a 31-unit bachelor apartment with grad students, but I don't know if I can really count on that income, and certainly when I go to try and finance this building, because there's no record of that income, I'm not really going to be able to use that to help me qualify for this property. So that's kind of a lost value there. So that's too bad that they haven't been reporting and recording it appropriately. Now, obviously, the reason a lot of people decide to do that is they're trying to get cute with their taxes. In my opinion, you're much better served just to appropriately claim that income and then pay the taxes on it, because it's going to create a more accurate picture of exactly where your investment property is at, for whether you decide to refinance it in the future, whether you're looking to sell it in the future, or maybe even just bring on a joint venture partner and liquidate part of your holdings in that building. Now, the next sheet that I'm going to pull up here is this is the actual rent roll, or the rental income. So what we can see here is they've got all the different apartments listed out and what they're currently getting in monthly rent for those apartments. A quick scan, it looks like $775 a month is the highest rent per apartment, and looks like the lowest rent is going to be kind of in the low 600s, 641, 647, 615. So again, this is great because it's giving me a range of what I can expect as far as fair market value for the building. Now, based upon my personal experience, if anything, I think that these units could probably rent for more than $775 a month, because it is in downtown London, very desirable location, close walking distance to absolutely everything that our downtown core has to offer. But one thing I do want to highlight for everyone at home watching this is one unit shown as vacant and another one shown as superintendent. So that's 2 units that aren't collecting rent every single month. Again, once I spoke to the owner and got a little bit of information, I was able to find out 2 of his family members live in this building. One is a superintendent, the other one just for free. This is another big mistake I see a lot of potential sellers making, where they're not properly reflecting what the gross rent should be. So in this case, it would have been much smarter for the owner to actually rent out the property at fair market value to their family member, and even if they're going to credit the amount afterwards or pay that family member back the amount that they've been paying, it's going to better and more accurately reflect the potential of this building. So they're really handicapping themselves by not including that potential rent. In essence, if we're assuming $775 a month, that's like, what, $1,550 every single month that this income is being underreported. If we put that on an annualized basis, that's over $18,000 a year in income that we're not recording. That $18,000 would just be added to our bottom line because all the other expenses are already included on the expense sheet. So that's kind of it for this video, guys. I'm really curious, did you enjoy this? Do you know, get value from me quickly running through the numbers? I know back in the day, for myself as a real estate investor or an aspiring real estate investor back in 2010, I would have went crazy to be able to get to see the financial statement of a 31 unit apartment building. So you guys let me know, jump in that comment section, give us your feedback. Do you enjoy these quick, fast, down and dirty number crunches? Would you like to see more of this? Because if you didn't know, I'm making about $5 to $10 million in offers every single week as part of one of my larger investment companies. So we're currently trying to, you know, acquire 30 to 50 units per quarter. And in order to do that, we have to make a lot of offers. I need to look at a lot of financial statements and walk through a lot of buildings. If you guys would like more content of me analyzing potential deals, me breaking down the numbers, and me sharing just the information I'm able to get from sellers when they don't make me send an NDA. So oftentimes we'll actually end up having to sign a non-disclosure agreement. In this case, there wasn't one, so I didn't have to worry about it. So don't sue me, bro, because you can't. But would you guys enjoy this? Well, what did you guys think? Are you enjoying these analysis-oriented videos? Would you like to see me doing my due diligence process deeper and like showing more of how we go about vetting these 30-plus apartment unit buildings that we're constantly looking at buying? Because if you didn't know, myself and Jeff Weibel, we're making about $5 to $10 million in offers a week just on large multifamily deals. That doesn't even include what my wholesalers are out doing. They're probably each making another couple $1 million a week in offers. Together as a team, we're probably making 20 million plus in a good week of offers. Now that doesn't mean that we're closing every one of those deals, but it does mean that we're starting a conversation, we're starting a negotiation, and we're going to see where we can end up and whether we can make a win-win for ourselves and the seller. Anyways, if you guys enjoyed this video, what I need you to do is jump in the comment section and let us know that you want more videos like this. Smash that like button, hit the subscribe button if you're new to my channel, and we'll see you in the next video.